Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in tonight's video, we're going to go over all the closing trades and opening trades that we had for Wednesday, November 4th. Now this is a really cool video because it's funny all the time on my end. I wish sometimes people could see just the types of emails that I get often throughout the day, and some from members, some from non-members. And obviously I'm doing this video now to, people who are on either our pro or elite levels. But I get emails all the time from people when we have maybe like 2 trades that go bad, right? So like last week, we had trades that worked against us. One of them was GoPro, which we ended up turning around and only losing $9 on after making adjustments. But we had trades like that go bad, and then people email me and say, oh, well, you didn't pick the right stocks, or, you didn't have the right strategy, or you didn't do this or that. And at the end of the day, all of this stuff, again, is just a numbers game. That's all it is. It's nothing more. It's nothing less. People overcomplicate this business so much. It is just a freaking numbers game. And what that means is that we have days like today where we went, basically 3, 4 for 4 out of all the trading that we did. And people were emailing me, the same people from last week, saying, hey, great picks, Kirk. These were really, you had the right strategy. It had nothing to do with that. It had nothing to do with great picks. Had nothing to do necessarily with the, the right stocks that we were selecting. It's just a numbers game. Sometimes you have 4 or 5 losers in a row. Sometimes you might have, 10 losers in a row. But you have to keep trading. You got to keep placing orders. They got to be small so they can be manageable. And then you have a string like this. And it's the same people last week who stopped and said, you know what, I'm done with earnings, that are now missing out on all the profitable trades that we've had since then. And so anyways, I thought it was just, worth, again, repeating. Look, this whole business is just a numbers game. You master the numbers and everything else takes care of itself. But you have to be in the game long enough to actually see that happen. If you quit after a month or 2 months, it's never going to work out because you're never going to have enough trades on to actually see the probabilities work out. And we'll be talking about this tomorrow when we do our podcast. And we're going to be recording that podcast on our new performance section, which you guys can see now. It's all live and up there and inside the membership area, but we'll be detailing it a little bit more. So first closing trade that we had today was in X. This was US Steel. Bought back our straddle for a $98 debit. Took a $35 profit on this one. This one, although the stock had moved inside of the expected range, so here's US Steel, didn't make as big of a move as was expected. Implied volatility has not gone down yet. So this is actually going to be one that we're going to be looking at tomorrow for a possible candidate to do a monthly trade on now that we're past earnings. But that's really why we didn't get the full kind of value out of this earnings trade that we really should have if implied volatility had dropped. Implied volatility on the close was at about the 82nd percentile. For the next earnings trade that we closed out of Michael Kors, KORS. We bought back our straddle for a $230 debit. Took $175 out of this trade. Nice little trade. Stock dropped less than expected and also saw a drop in implied volatility. Moved up less than expected. Also saw that drop in implied volatility very fast, very quick because it was at the 100th percentile. So very, very quick, fast drop in implied volatility. That's what made this trade profitable so quick. Other trade that we closed out today is DDD. Closed out of this straddle as well. We bought it back for a $77 debit, $63 on this one. Implied volatility dropped. It was still high when we actually closed it out, but again, just taking money off the table right at the open. Stock moved much less than expected, actually kind of traded and opened right around midpoint and then rallied throughout the rest of the day. So had you gotten out, right after the open or shortly after the open, that's when you had the biggest opportunity to make money. After that, you probably dwindled your opportunity to make money if you try to wait throughout the rest of the day. And again, that drop in implied volatility is so critically important for these earnings trades. That's where we make our money. And then the last closing trade that we had today was in Tesla. We just bought back our call spread side. So we just only closed out the side that the market moved against. Basically took this off for about an $8 profit, basically a scratch. We were just worried that at some point during the day after the market opened, that Tesla would rally much higher. And you can see it actually did rally from the open. It rallied up to and above about 231. So it definitely challenged us on the top side. But what we did see is that drop in implied volatility. And unfortunately, it just was kind of on the border. Ends up being a win in our win column because we did end up closing it for a profit, but a very, very small profit. I'm glad we closed it early in the day. Probably could have saved a little bit of money by doing that. All right, so 2 new trades that we entered today. We entered the straddle in WFM which is Whole Foods, got a nice big credit of about $3.15. You'll notice, again, the reason that we're doing this straddle is because implied volatility is in the 100th percentile. It has never been higher than where it is right now over the last year. And that just means that option pricing has to be aggressive when you do these types of trades. You have to sell at the money positions. And so you can see implied volatility very, very high in Whole Foods. Tends to be a really good drop in implied volatility around Whole Foods after they announce earnings. Now, after the market is done here today, I know that Whole Foods was trading lower, about 28.73, 28.75 or so. So looking at our payoff diagram, it still looks like this is going to be a nice profitable trade. You can see most of our payoff diagram kind of peaks here at 30.5, but with the stock trading about 28.85 cents or so, we should end up making about $100 or so or more tomorrow when this thing opens back up. The other trade that we had today is in GoGo, G-O-G-O. Again, we took in a nice big credit, $1.95. Implied volatility rank in the 100th percentile. Super, super high implied volatility. Just purely selling options right at the money. I don't believe that GoGo actually announces earnings until tomorrow before the bell. So we'll have to see what happens with this one. But I mean, crazy, crazy high implied volatility. That means option pricing is really, really skewed on either end. And again, we just did this a little bit bearish because we had to pick a direction here and went with the 14.5 just because of the overall trend that this thing's been on. So, you know, playing the downtrend just a little bit that maybe earnings aren't going to be as good as maybe expected or they might miss. So that's the way we're playing this one here. So as always, hope you guys enjoy these videos and all these new alerts and functionality. I know we've been getting a lot of great feedback from the many hundreds of members that we have. So I appreciate all the feedback and all the updates. We're definitely working hard to make sure that everything rolls out as smoothly as possible. And as always, if you guys have any questions at all, please add them right below here, and happy trading.